dialing in right now as we speak. So what I'm going to do is get started, and he will, in fact, you will hear him in just a minute or two, but I'm going to jump in. I have a few slides that I want to touch on. I want to give everyone a 100-foot overview on what we're talking about today, some of the marketing material that we have available. In fact, we are going to put a thank you email together. We'll send it out before we leave tonight, and we'll include everything that you need to get started, okay? We have some email blasts that you can send out. We have some great social media posts, and we have a intake form. So if you have a guy or girl that you think would be a good fit, a good candidate for this concept, then we have, in fact, it's a 2-pager that you can fill out and send it in to us, and then we will get some sample illustrations for you to go out and present. Okay, so everything will be included. In fact, we have a premium finance section on our website dedicated to this concept and everything that you need from each of the 4 go-to companies as well. So it's kind of like a one-stop shop for premium finance. So what I wanted to do today, as he's dialing in, I know he had some issues, so again I apologize. But what I wanted to do today is just kind of give everyone, if you can take a step back, I want you to take a pen and paper out, or if you use a notes app on your iPad or your phone, I want you to please write down some of these bullets. It's so important because, you know, you hear rumors, right? You hear things about premium finance, especially years ago. It's a completely different world now. Patrick, are you on, bud?
I am here finally.
Okay. All right, great. No problem. I'm just giving everyone a little introduction, and then I have 2 slides, and I'm going to turn it over to you. So if you can just sit tight for a couple of minutes, and then I'll introduce you. So we appreciate you joining, by the way. Okay, good stuff.
Thank you.
Yep, no problem. Okay, so Patrick is here, as we can all see and hear, which is great. Okay, so switching gears for a second, just please, I want to make sure that you all remember these bullets, these ideas, because I know, right, we have 23,000 agents, and I know most of our agents know a guy or girl that this would be perfect for. Okay, so please, I don't want you to forget. I want to maximize every minute spent with us. I always say walk away with these nuggets, and the only way you're going to learn, right, and maximize your time is if you write things down. Keep it right in front of your face, your computer, your phone, whatever it is. Okay, but it's so important. What we're also going to do a little different today is you have that Q&A pane, the expanded window pane, or you can minimize it. But what I want everyone to do is expand it and share comments. You're going to have a ton of questions, I already know. So please, especially if you have a guy or girl, even a small business, whatever it is, right? Please type in the question pane. And then when Patrick is done towards the end, we're going to have everyone's questions answered by Patrick live, okay? And anything that we don't have enough time to get to, we are going to answer you as soon as we hang up today's call right before 4 p.m. Eastern time. Okay, so like I said, it's a different world now with premium finance. I know I got off track a little bit. My apologies. But think back, right? Years ago, you had to have, whatever it was, a high-end surgeon, making at least 800 to $1 million a year that would fit in to this preferred best class with this certain company and product. Nowadays, it's a different world. Number one, with most products and carriers, okay, working with our preferred vendor, it's a 0% split, meaning you keep the commissions. And these cases are monster cases, as we all know. In fact, on the average, it's about 30,000 of target premium to over 100,000. Okay, so the opportunity is large. Now, for clients, for consumers, prospects, think about this and write this down. Anyone, any professional, right? Think white collar, making at least 150,000 of annual income, okay, and a minimum of $1 million of net worth. They are a prospect for this concept now. okay, especially with the smaller case premium finance platform, which is what we're touching on today. So we all know someone that this would work for, okay? And if I were you, as soon as we're done, I would start writing down names, people that you want to send a marketing piece to open the door and talk about this concept. And then once you're active with us and our vendor, you can lean on Northstar to get all of the information that is needed for you to close the deal. They'll do everything except speak to your client. Okay, and that's obviously where you come in, and you want to have control anyway. So that's a win-win. But we all know someone that fits into that category, right? At least 150 annual income, minimum 1 million net worth, and of course, typically standard, preferred, or better is ideal. Okay, preferred, best, even better. But we all know someone that this would work for. So start jotting down some names, especially as soon as we wrap up. We also have our marketing pieces we can co-brand for you as well, which we'll share towards the end. Let's jump right in here. I want to shift gears again and talk about our agent testimonials. You are our customer at the end of the day. We have to make sure that our service, right? I always say that it's not 100% because that's not realistic. No one's perfect, but we better be about 98 to 99%. And then for the 1 or 2%, right? If those issues come up, me and Carrie need to jump in and try to make it right. Okay, now sometimes it's on the carrier, nothing we can do, but these testimonials mean the world to us, as you know. So real fast, top left corner, these are all very recent. So we wanted to share. I deeply appreciate all that you do for me, Christy. You are my personal rock star. Jody, I know you're on. I see your name, so you're listening. So thank you, Jody. In the middle section on the bottom, Ian. Ian was on our agent panel this year at the Expo, and he shared this with us a few days ago. Thank you, Carrie, for the update. I appreciate your assistance. You are a man of your word. I admire your work ethic. Now, we all know, right? A man of your word, woman of your word. Today, that means so much because you don't find that. So I wanted to personally share that from Ian. Thank you. Again, top right corner, Beth, right? Who is Beth if you haven't spoken to her? Beth handles all of our in-house marketing, Insure Me Now Direct, the Ringy platform, Agency Automator. So call her, lean on her, especially if you want to use maybe our free website option or the CRM tools or the follow-up system with Ringy. She can give you the insight that you need, right? Enough to get you started, enough to make sure that you're off to the races. So once you're set up, please lean on Beth. This is from Wayne. Beth is awesome. I asked to have an embedded link to be put into a PDF for social media. She made magic happen by Wayne. Again, means the world. Share these things on our Facebook page, through our Google reviews page, and we send you the free IUL prospecting book on us, but we want to hear from you. This company was built around you guys and girls, agent feedback. Okay, if we're not doing something right, we need to hear about it and we need to change these things. Okay. Again, fast forward. This is just a quick sample case, and Pat is going to dive into everything, but I wanted to give everyone a teaser real fast. This was a recent case with Allianz. This was a male, age 38, second best class preferred, annual income of 350, net worth of $2.5 million. So obviously, very successful gentleman here. Now, this is what's interesting here. So the client was able to get a great IUL policy, right? Now think about this. The bank or lending institution is paying 75% of the premium. Okay, and you can see right there, client contribution, $31,000 for 5 years. The premiums to fund the policy, $60,000 over 10 years. This was done in 60 days, and the agent walked away with a $36,000 commission check. Okay, and I want to say real fast, that was with Allianz, our top four go-tos, Allianz, LSW, Emeritus, and Symetra. Okay, and we spoke about a 0% split. Allianz, they do actually take 15% that must be put on the app for the vendor, okay, or the lending institution. Okay, so that's very important to know. The other three companies, 0% split. So very important and very rare, especially these days. There's a lot of third parties out there that talk about, hey, we're the experts in premium finance. Meanwhile, they're keeping 20, 30, 40, 50% of your case when it's your client, which is ludicrous. So there's another big third party vendor, right? We used to work with a little bit, and it turns out now they're an IMO. So they're out there talking to your competition, other agents, and the same consumer bucket that you're marketing to, which is crazy. So anyway, that's what I love about North Star. Carrie and Kim, the owner, go back years and years and years. In fact, I did a podcast with Kim Coulter. This is his brother, Patrick, who's speaking today. I want to jump right in, and I'll just say this. When it comes to premium financing 2023 and in the future, there is no better partner than North Star, okay? And I'm saying that on a recorded line, and I mean that, okay? In fact, they are getting 99% of our cases now moving forward. So without further ado, I want to introduce Patrick from North Star. Pat, you there, buddy? If we can
Everybody hear me?
unmute. Yep, loud and clear.
Okay. Am I coming in too loud?
Nope, that's perfect.
Okay. Great. Show my screen. Let's see here. Let me see which one this is going to want to show. Oh, start showing my screen. Show screen. Which screen can y'all see?
Right now, I see your screensaver. Okay, there we go.
Okay, everybody's on that screen?
Yep, we are good. Yep.
Sorry, y'all. I've got 6 monitors. So when these Zoom calls go in there, you always got to try to track where you're actually at. Anyway, hey, welcome. Thank y'all for coming to the meeting and so forth, and Bill and Carrie and RJ and everybody else involved. We appreciate the opportunity to come in and teach y'all and let you learn what North Star does. First off, I want to go through and just briefly explain. And as I had a conversation with Bill earlier, some of y'all are going to be, how should I say, veterans. Some of y'all are going to be beginners, which there's no problem in any of that. What I'm going to do for every one of y'all today, as far as give you the highlights and so forth, and then during the premium finance, as far as discussions go, after today and so forth, when we get to visit with y'all one-on-one to help you with your case and so forth, I consider what we're going to do is take you to the next level. We're going to actually show you how everything is broken down and literally complies with what the bank has to do first. And then we're going to take it a step further. So always remember one thing in premium finance. You can never break the mechanics of the bank, or you just found out a way to be, how should I say, put in fuzzy math and bad numbers and everything else, okay? So if y'all can see my screen okay, now I'm just going to hit the high points because y'all can actually, a lot of y'all are going to be auditory and visual people, and you can actually read faster than I'm going to talk. So I'm going to hit the high points of just who we are, okay? So I'm going to go to the next screen and actually let you see this. Maybe I can blow that up for y'all. Can y'all even see that very well?
Yep, we can see that. There we go. Even better.
Okay. Right out of the gate, I want to let y'all know that North Star's been doing this for over 2 decades. And during that time, we've learned how to evolve. We have over 3,000 transactions. I don't know how far it is now. It's probably way more than that. It's probably up toward 4 or 5, but because we did this presentation about a year and a half ago, but we keep taking things out and putting things in and so forth. But anyway, we've done over 3,000 transactions on the books, okay? And our basically strategy out of this is going to comprise of actually helping y'all with the sales support, the lender partners, and the technology that we have, okay? It's all engineered one thing, and that's to help you make the sale and get you to the finish line. We do not have, how should I say, an agenda to actually push a carrier on you. We get paid to put loans on the books. We evolved in the premium finance strategy where everybody else is still stagnated to what we were doing 15, 16 years ago. Okay, and each year, North Star tries to evolve even to more. And if there's one thing you always find out about a competitor out there that thinks they're a competitor, is we always seem to have the biggest target on our back. For number one, is because, like I said, we evolve and we do things and get things done that none of the other vendors can. Okay, so inside of all this, if y'all understand that, What we're actually going to look at is the portfolio being able to do traditional estate planning cases for premium finance, personal income or corporate benefits, corporate lending. Don't let the word corporate for C Corp, X Corp, or LLCs get complicated, because it's not. You're going to find out you're going to be on that side of the field more than anything else. We have a broad range of actual incomes to help your clients qualify. And as you do know, some carriers out there, which they all have to be A-rated or better, because always remember this, in premium finance, lenders do not want to fund a B-plus rated carrier. In fact, they just won't do it. So we're always using A-plus rated carriers. We can also do group cases, which we'll have a good conversation with you on that. Let's put it this way, it's not like group health quote. These things take time to put together, because you're going to run an individual. We are going to run, excuse me. I say that because you will get the opportunity to do this, because I'm going to just let the cat out of the bag here real quick. For all of y'all that didn't know, every one of our advisors out there, Bill and so forth, they get access to the software when they get one case on the books. We give you the software of what every other vendor out there wants to charge you 20 to 50% of their case for. So in the long run, that means you have everything they have, and you're not giving up a commission split. So why do you need anybody else? Now you can see why that would make us the biggest threat out there, is because nobody else does that. Okay. Enforced case designs. You're all going to know about other cases that are out there, whether they're small case. I won't mention the other competitor right now, but small case and or traditionals. Okay. Interest rate spreads. We have multiple lenders. We like our primary lenders because we use proprietary loans, okay? But also, we actually came up with what's called the zero compensations. We call it the ZS platform. And that was where we could take zero split of your commission. Now, some of this I'm heading on because Bill already took some of my thunder, but that's okay. But anyway, this was the small case platform that we'll be talking to today. Was designed for one thing. It was called the loss leader. It was actually to help the advisor that doesn't hang around with people that are $5 and $10 million net worths, but you do hang around people that are 2 and 3 and 4. And you'll find out when you do one of the small case platforms that we'll get into, you'll find out they like to go brag and tell their other people, or maybe just mention it out of, you did a great job. They want you to see somebody else. It was designed to help you get into the bigger clients. Literally, that's the whole purpose why it was done. We've come to find out since then it's been a great deal, because there's more middle class out there that will qualify than there are the top 1%, okay? Inside of this, when we're doing this, we actually have 4 nationals, and we always look at this. When somebody asks you about a 4 national, can you do one? If the carrier will issue the policy, then we'll fund it. It's pretty much as simple as that, okay? Because the carrier's not going to let your client buy the insurance over here unless they have bank accounts and spend 6 months and all that good kind of stuff. So can you do 4 nationals? Yes, all day long. Multi-lender pricing and so forth for case evaluation. When you get up into the large ones, those are the ones that are 1 million to 6 to 10 million a year in premium, which don't let those numbers scare you. They're out there, and they're just, let's put it this way, they're just as hard to sell as the other cases. You just got to be better at what you're selling and just put the strategy out there, and it will sell itself for you. Okay. Multiple collateral options. Our small case platform has no collateral. Okay. Our traditional platforms do have collateral, because those are the ones your client's going to customize on what they really want to pay and, what they want to put up as collateral. Okay. Does that kind of make sense to everybody? Hopefully I'm making sense to all of y'all. Okay. And the actual focusing on what we do, as far as the services, we see the expectation of what we do as far as our case designs. We have 20 years of this on the books. We've seen the interest rates go from high back to low. Now they're at mega high. And I don't think anybody in the industry saw that we were going to have a 100% plus increase inside of 12 months. That's never happened in 37 years. So it's made vendors such as ourselves go back and reevaluate our algorithm and our software to come up with the correct collateral. Okay. That's on traditional cases and on small cases as well. Okay. We do proprietary loan modeling on software. We have it for the desktop, and we have it online for the advisors. Okay. So as y'all are going to see today, quickly or here today, let me just put it this way. You're going to have access to all this. And that's something that no other premium finance vendor would even dare give you. And that's how we've evolved into the system. Sales illustration support that illustrates the aspects of premium finance and it explains it, but we also design it a certain way so that we can actually help you sell it, because we don't get paid unless you get paid, because we get paid to put loans on the books. So if we can't get you to the finish line, we haven't done our job good enough. We're here to offer you the service to get you there, okay? The dedicated file case management, we're broken up into divisions in our company, whereas y'all will have access to the case designers. When you're quoting, once your case goes to the part where you've got it underwritten, you would then go to the new business department. We have another team over there. Whether you're in Florida or California, Arizona or Texas, you'll be able to talk to somebody about getting your case done or what's outstanding and so forth. So we're in every time zone to help y'all get that. So for the ones of y'all from California to Florida, you still have somebody to visit with, even on a late Friday afternoon and so forth, okay? Now, education training, part of what we're doing today is the education training on what we're going to do for y'all is the webinar and so forth, point of sale access and case consultation for the advisors and shareholders. What we actually do on that, what that means is that when you go in to get your large case, and I mean large case, in other words, let's say you're starting at $1 million premium, $750,000 a year or something like that, and you've got a CPA or a tax attorney in the room, we can put an individual on there, not to sell it for you, but to do the Q&A, the questions that those two individuals, maybe three or whatever they got in the room, and we can answer those questions. There's not a question out there we can't answer that will leave us going, we don't know, because we've already been down this route before, okay? And you'll want that support to get that case to the finish line when you get up there. But anyway, Special Design Sales Concept for the small case, we call it the SCP. It's actually called the Insured Retirement Advantage, the IRA, and that is trademark. We own that name, okay? That is what we'll be talking about today. It is the same thing as a traditional, so to speak, except it's not so different. It doesn't have collateral, okay? Which makes it easier for you to sell, just like selling a regular life policy, okay? Now, as far as when we were here, we actually go back further than 1997 at North Star Brokerage, because originally we started Dominion Brokerage. That was back in Dallas, Texas. And some of the competitors out there, as I explained to Bill today, actually worked for us and tried to basically say, we're going to be in the premium finance industry too. We don't believe in what they do or their strategies. I'll point some of that out later. Okay. Anyway, we got rid of the North Star Brokerage. Why? Because it looked like we were interfering with contracting and so forth, because that's what everybody still does today as far as a premium finance vendor. Us as a premium finance vendor, we are out of that. We do not touch that. You will do everything through Bill or Levinson and Associates, okay? And remember us, the marketing people are. We will be totally out of that. So when you come at us, don't be asking about contract amounts and all that, because we're not in that business. Hopefully y'all understand that. We got out so that we wouldn't be a threat, and we were better able to serve the Levinson Associates and other entities, for that one reason and so forth. Anyway, the relationship we have is usually through 5 lenders. When you get to the 5th lender, you're probably in a very large case, and it's literally nothing but no more than a rate war. And I always tell you this, in premium finance, if we go through a rate war, you're going to get your rate to get the case and beat the competitor. But I will tell you, banks have a different strategy 2 years, 3 years down the road on why they gave you that cheap rate. Okay, so just keep that in the back of your mind. Okay. But actually, we act as an intermediary between you and the insurance companies and the lenders and put everything together. So let me tell you something. We earn what we do. And we feel like we do it better than everybody else out there for one reason. You want to go through our designs, you want to tell us something's wrong, we'll have no problem telling you everything, and or to the other tax attorney or CPA that's sitting in front of the client. And we can always do one thing, and that's we do what's best for the client based on your recommendations and your requirements that you want us to do. We do what's best for the client. Therefore, if we always do what's best for the client, then we protect Levinson Associates. If we protect Levinson, then we protect North Star. That is all we care about. We do not want problems down the road because something wasn't right, okay? Hopefully y'all can see that, because that's loyalty. And in our business, loyalty is everything, literally, okay? Now, I'm going to jump right through this because y'all can read this on, North Stars here and so forth. The Retirement Advantage back in 2016 is when we actually put it out. We actually designed it the entire year of 2015. We just didn't agree with the loan that the lenders wanted us to do. If y'all are familiar with small case platforms, the minimum premium a lender will want to pay is $50,000. Anything less than that, they just don't want to do. Now, there's a way around that, because if you have two individuals, you could do 25, she could do 25, or she and she, or whatever it is today. But that would still get you up to a total loan of $50,000. So there is a way to do it a little bit less than that. Most people don't do that, because then your case is going, it's split, and you're not getting as much as you want to out of it, okay? Other than that, let's see here. Let me just look at this, because some of this, Bill's going to send you over probably a presentation. And one thing about the presentation that we're fixing to go through is we can customize it. I'm going to jump out of this real quick, and hang on one second. I'm going to bring this up. That's not it yet. Okay. And this is basically a presentation that you could actually sit down with your client. If you wanted to take the long route, you could do this. Now, I'm going to cover part of this, because our illustration that we do with the small case platform, the Insured Retirement Advantage, it also has a lot of this in there, so that when you leave the illustration in front of your client, they're getting the same information, okay? But in this one, we have the customary and compliant loan designs. When it says compliant, we make sure that everything we do is compliant with the carriers. If y'all aren't aware of this, anytime you're a premium finance vendor, everything has to go through the legal sides of all the carriers as well, so that you're not making misstatements or anything else, okay? In the small case platform, the loans are secured and fully collateralized by the policy cash surrender value, okay, and other lender acceptable collaterals. Now, when I say other lender acceptable collaterals, I'll get into that part when we look at the illustration, and then I'll explain to you what the other competitor out there does that we don't agree with, that puts 100% pressure on your client, and you don't, okay? The wide age, that they can qualify through is usually 18 years old. Now, you can go lower than that with some carriers. Most carriers don't want to write anybody less than a juvenile, okay? But there are carriers that you can get a juvenile done, and the client could actually stand in and say, I want to do this for my kids and so forth as well. So there's a lot of products involved and so forth as far as what you're going to use through Levinson Associates, but they're all available for different reasons. There is not one carrier out there in premium finance that says we do it better than anybody. That's not true. There are the reasons, such as underwriting, or actually cost of insurance, or the approved strategy that the carrier wants to fund. You cannot imagine how many different scenarios you now are fixing to get exposed to on how you can actually customize one. I'm going to show you all how you can open up the door and go out and visit with clients that you got sales in front of you right now. You just hadn't been steered in the right direction using premium finance as a strategy, okay? And we'll get to that. So I'm going to go to the next slide real quick. The primary principles of premium finance, as y'all know, is leveraging the money. In other words, let me do something with my money, and I'll use the bank's money, just like you did when you financed your car, just like you did when you financed the house. Why not finance your life insurance? Even the wealthy people don't want to pay $124,000 a year for $5 million at age 60. They don't want to pay that. They'd rather say, is there a better way for me to do this? Yes, you can finance it. And we're going to show you how to do that, okay? Retained capital. Retained capital is no more than Bill came in, and Bill, I'm using you as an example. I hope that's okay. Bill came in and showed me how I could finance my life insurance at $50,000, and I could go do something with the other $75,000. Well, that frees me up to go make money with my money. And I didn't get wealthy by not doing that. I usually make 30-40% on my money. So Bill showed me how I could free it up and take a longer approach to still achieve the insurance need I need, or the income I desire at 65 or 50 or 70 or whatever I'm trying to do with my money, okay? As you all know, we all use fixed index universal life. You cannot use a variable life policy, okay? But you can use indexes. I would tell you this, if you've been selling insurance, I've been selling since 1984. The policies that we sold back in those days that were universal life and so forth, they were good policies back then. They were to compete against whole life. Those don't work, okay? Now, can we also use whole life policies? Yes, if you're a diehard whole lifer, that's fine. You're just going to take a real long approach because you can't ever get a market gain on the actual policy itself. You're always going to get a dividend, and hopefully you all know what the dividends are. That's an overcharge of premium payments rewarded back to the client in the form of a dividend. Okay, but you have those access and so forth. Medical underwriting, that's going to be up to whatever y'all can do. There are times that when we're dealing with an actual RVP or whatever your carrier is, that we can help kind of push things through as far as on our end on getting an RVP to do that. Okay, so we do have push inside the companies. I will tell you this, when it comes to premium finance, and I know we're on a recorded line, but I know it was probably last year, we did probably over 60% of all the business at LSW and Allianz. You just don't see us and hear our name for one reason. We're not on the app. Okay? So that kind of makes us the person in the side room, but it doesn't matter. They know who we are. As far as, let me just give you an idea, the largest group case that's been written. People, it takes a lot of time. There's a lot of, how should I say, politics involved on getting the carriers to give you people that want to get things done for you. This is where we come in. The largest case I think LSW did was 89 people, premium finance. And it took us about a year to get done, but it was worth it. I mean, the advisor made 7 figures on it, so he didn't care. And it was a great way that it was constructed for the corporate agreement that was 70-30 on that. It was a win-win deal for everybody involved in on the group side. You may have other people, and we'll get to this, as far as buy-sell agreements, as far as doctors that are looking for a way to set up retirement or actually have a succession plan to actually come out and say, what do I do with all this money? Today, you're going to find out how you can talk to these other people or entities about what are you going to do with all this money? I mean, when's the last time all of y'all or any of y'all walked into your client and said, how much asset protection you got? I mean, I don't mean LifeLock, that's identity. I'm talking about asset protection. And or when you sell your business, Mr. Doctor, where are you going with all the money? I'm strategizing now with the client in a way that nobody else goes in the room and talks. Why? Because I'm going to show them how to get it going. No different if it was a manufacturing company or a real estate person, okay? Projected interest rates on all of our illustrations, we start out with whatever the current rate is, and we do it on a daily basis, okay? Now, you might have a loan in prime. You might have one in CMT. For you ones y'all don't know what that is, that's the constant maturity treasuries and so forth that took over LIBOR. That changes daily, okay? Our illustrations are timestamped, so we know that when we quote something, that was the rate that day, okay? And that's very important to you, because if the client says, well, why is this rate like this? And you brought one in the other day and it's like this. Well, the rates went down, or they might have gone up. You always want to be able to go back and protect and explain why you did what you did, okay? And so that's where we come from on that. So let's move on to the next one. Your planning objectives on this may be for death benefit and or income. You're going to actually use an index UL so that we can generate superior yields and so forth. I think all of y'all will realize index policies give you what the old policies of universal life and whole life get, because if you're scared of the indexes doing zero, you can always go to the fixed, and the fixed would be paid out at the end of the year on what's called a net yield on invested assets. Everybody remember the old AM Best books? You can go and look at it, a net yield on invested assets. Take 2% to 1 3/4 off there. That will tell you what we're probably going to pay the client. That's on the fixed side. Now on the index, you all already know this. We do not give you advice on the indexes. We've got plenty of knowledge on it. It's your job to give the client the knowledge on the indexes. Now, what we will tell you is, out of experience, don't bust up more than 2 indexes. Don't go to 3 and go to 4 and think you're going to get a gain because that one will make this and this one will make that. All you're doing is robbing Peter to pay Paul when the other 2 don't, okay? And we'll get into that later on. But always remember this: it's your case, your client, your call. You tell us how you want things done. Even if we have to reverse engineer to the premium finance strategy, this is not a situation, even on the small case or traditional, that you're going to have to just say, well, this is what it is. I saw where y'all introduced the first one at 75-25. You could do 50-50. You could do 80-20. It's your call on whatever you want to do, okay? We'll put it into the design and see if it works. And that's what you're mainly, you're counting on, is actually, does it work for my client, okay? Loan structures, you have now everybody. And when I say everybody, your business, your LLC, C Corp, S Corp, and so forth, business owners, corporate officers, so forth, lenders, trustees, lenders, everything's going to come into play on this, as far as now you get to go in and talk to an actual corporation. Anybody here, and I'm kind of shooting at the hip trying to go fast because we still got a lot to cover. Y'all forgive me on this. because we're going to get a lot more of these, and I'm going to be able to work a lot with you as far as Garrett, Jeffrey, and so forth, and Brock, all working with you on a one-on-one basis, discussing your cases and helping you design it, but yet educating you on how really everything works. These guys are all professional and seasoned vets as well. They've all been in the business a long time too. But we look at it when you're going to do a premium finance strategy, when you just look at a client, you're saying, well, we can put this in a trust. Okay, well, great. What do I get out of that? Nothing. You basically just bought Index UL on a one-on-one basis, and you always remember this, on Index UL, which is great, but when you just set it off the regular market, you pay, you get, it's over. You left out all the options that client could have gotten under a premium finance strategy, which we'll cover in a minute. But always remember this, you now get to talk to businesses, and there's a ton of businesses out there that are wealthy. They just need somebody to tell them how to get the money out of the company instead of paying income tax on it or writing themselves out a big paycheck. We'll get to that. Okay? So like I said, I'm hitting y'all pretty quick on this. I'm actually, how should I say? I'm appealing to your side of knowledge that you already know some of this. Okay? If you don't, I can still go back with the ones that done, and we could have another webinar on basically 101. So I'm trying to help get you all into this speed up. Okay? On this particular one, yeah.
Pat, also, just so you know, we have a Q&A pane. So I encourage the agents to ask some questions, and then we're going to leave a little time at the end. So if anyone, like Pat just mentioned, any questions whatsoever, type them in. We'll get to everyone, and anyone we don't get to live, we will circle back after the presentation. So, Pat, you can keep going, buddy.
Okay. Two different ways, two different ages, when we say a wide age range and so forth. You're going to run into some clients that are 80. Don't even try to attempt premium finance because it barely worked when the rates were down at 1% and 2%. I'm just going to tell you that experience. You're better off just selling the person a guaranteed premium UL or survivorship. I would never want you to get anybody at that age into anyway that maybe their siblings and so forth could come back and say, you've ripped off my grandparents and so forth. They should have never done this because now they're incoherent. You sold them this and nobody was in part of the conversation. You never want to be doing that. You never want, in premium finance, number one rule, never get somebody in over their head. You're the first person that's going to sit in front of them and qualify them. You have to make that professional decision. It's going to be a good day for them, but it's also going to be a great day for you. But there are some people you just have to look at and say, gosh, I really wish you could have this, but I'm not going to put you in it. Now you're saying that to yourself, okay? Anyway, traditional cases, you can go up to age 70. Depending on the time zone, if your client understands they're going to die probably at 85, then you might be able to still do it. Okay, net worth in excess of $5 million. That's pretty much the general for all carriers, except for one, LSW. LSW can actually go between the ages of 30 and 50, and you can actually have an income of $250,000 a year and $350,000 or $3.5 million in assets. That's what it is. They change it sometimes, and everybody's the last one to know. But anyway, $250,000 a year, $3.5 million. Those individuals can still do premium finance, and yes, we do have a lender for that. Okay, so that opens up the door for not only the small case but a mid-range case. Instead of always making sure your client has a $5 million net worth or more. When you say net worth means net worth, not I'm worth $5 million. Is that really what your net from your liabilities and everything? Remember, they have to answer that just to make sure the bank's going to qualify them, okay? And getting somebody in over the head is when all of a sudden the net worth gets, how should I say, penciled in wrong and becomes a dead in water case. Adjusted growth income on the small case platform, you now have two ways to qualify the client. You don't have to do both, okay? And the small case platform is $750,000 a year adjusted gross income. Not just $150,000 income, or excuse me, $100,000 to $200,000. Carriers have their limitations on what they'll accept, what they want. They call the golden egg. So when they tell you we'll do it for $100,000 or $150,000 or $200,000, you have to go by that. But when you're doing the small case platform with us, you can qualify your client as long as they're making $750,000 a year, backed up by 2 years tax returns. Then they can qualify themselves. That individual in that corporation might only be paying themselves a $60,000 a year income, and you look at it, well, you don't make enough. Well, my company's worth about $4 million and makes over $1 million a year. You just qualified them. So that gives you another opening door use the person's corporations, okay, or LLCs. And for y'all that don't know that, LLC can be set up for around $300, okay, and the client can be off and running, okay. So, large case opportunities and challenges, and they're career defining. What I mean by that is when you get one and you've brought it in and, how should I say, slayed the dragon. Yeah, they're life changing events. Okay, it is a narrow client. Okay, longer cycles depending on how one wants to pay and so forth. A little more decision making because there is collateral on that. We'll come back to that later. And that's also being able to secure the collateral. There are multiple ways a client can secure collateral, which everybody knows. You could always use cash. You can use treasuries. You could also use equities, mutual funds. You could also use, how should I say, annuities. And the annuities cannot be qualified because I'll just tell you right today, if you try to use a qualified annuity, number one rule is the IRS lists that and considers that immediate disbursement, even though you never took a dime out. So if you had $1 million annuity, but you put it $100,000 up for collateral, client just paid tax on $100,000. Okay. So we don't use those, but the girls in the new business office will walk you through this because your client may want to do one, this, that, or other. They might want to put up part of another policy. They might want to put up some cash. They might want to put up, a brokerage account, and we do not take access to the brokerage account. This keeps you, how should I say, in good graces with their current broker. You're just going to get basically like a collateral assignment against it. That way the client doesn't have to give up trading it or cash in money or get it exercised and so forth. And that allows a lot because a lot of your clients will have money in the bank, but they also have it in the brokerage accounts. Okay. The actual closure rates, I'd say they're lower on the traditional than they are small case. And today on the pricing, in other words, the interest rates, we've all seen this double. I mean, we're all living it right now. I mean, it's unbelievable that you go back to February and January when rates were still 2%, and now we're sitting at 7%, even 8.5% on prime. Okay. Anyway, the banks are still adjusting these based on whether you're trying to do a small case, traditional case, or even move assets to another bank to get a lower rate. Okay. All of these things can happen for you, but current environment is nothing like a credit crisis. Premium finance is still out there for the banks to make good, constant money and so forth. Y'all know today, as I already told you, that we transferred from LIBOR and went to CMT and SOFR. Okay, nobody uses SOFR because their rates are still out there, but everybody uses CMT. That's kind of the benchmark that took over LIBOR. And like I said, there's 30-day, 90-day, and 120 in 1 year that you could tailor make loans for. Don't think it's just one. There's several different ways a client can really get creative, especially if they're moving money in and out and so forth. We'll get to that later on another educational speed, so to speak. Okay. Contractually, I will tell you this. Spreads are everything. Spread is what the bank wants to charge you on the loan before they attach prime or CMT rates to it. Okay. And in the experience that we've had, it's not just I got 6% or I got 7% or whatever. What's your spread? Because that spread's going to be locked in, meaning the bank can't come back in and change the loan terms. Okay, that is very important to you. Okay, and I'll show you why the small case platform is going to keep that locked in for you for 20 years, and that's a big deal as far as the security of what you're fixing to put out in front of the client. Okay, debt providers. Cost of funds, margins, this is where Dell, if you want to get really, how should I say, interactively inside of what a bank has to do on buying their swap options and so forth, Dell can go over everybody's head. Dell's the president of North Star Funding Partners, and I'm telling you right now, you can't find a smarter individual. I don't care who you put on the phone. This man he's a walking genius, literally, and we're so fortunate to have him working for North Star. And one of the reasons when Dell came up, because he was running one of the largest banks, they decided to get out of the premium finance business. Dell became available. We knew him in the industry. We went and captured that man quickly, gave him what he wanted for one reason. He has the knowledge of everybody in the entire industry. I say that, as respect to him because he is the smartest person I've ever met in my life. And I know everybody that's out there doing this, so does Tim and Dell and so forth. They just don't come any smarter. And it is what it is. When you get to visit with him, you will understand this. This man's more on a corporate level instead of a sales-oriented level. And he will come at you with so much that's what I say, technical stuff that you'll be going, I just don't think I really need to know all this. But that's good. It means you have more support behind you. Like I said, you can't ask a question that we don't know. Okay? Let's go on to this as far as loan payoffs and exit strategies. Everybody, even on the small case platform and the traditional, all carriers want you to show that the policy paid the loan off and got your client out of the transaction. Okay? That's just a carrier guideline. I would tell you this right now, maybe 3% of our entire book of business, nobody takes that money out of the policy. Even though the carriers require us to show it, the client looks at it and says, are you crazy? That's tax-free money. I'm going to use outside funds to pay the lender back. Wow, this is a big deal. You couldn't do that when you just sold regular IUL. You couldn't triple my income like I just did either. Now, we'll get to that. But what I'm trying to throw is thoughts in here because y'all are going to have a lot of questions. And let me tell you something, the sky's the limit on this. All I can tell you today is you just got to raise because you're not giving up part of your commissions. And there's a better way to do this, a safer way to do this. And if you all are the top advisors, I think you are, and I am, I like to go home and sleep at night. And I always like to wake up the next morning knowing I did my best. And nobody can tell me I didn't, okay? In this business, I love that because that's when people brag on you. That's when they point the finger and love you. They shake hands with you, and you're always happy to see them, okay? So I've gone through the cash, the collateral here and so forth. I'm kind of hit and missing on this, but I'm trying not to waste y'all's time. Y'all forgive me on that because we'll get into this. The actual sales for this, for as far as your owners, ask yourself this. When's the last time you walked into a business owner? Let's say it's me. I've got a $4 billion business. I would love to write myself a bigger paycheck every year, but I don't want to pay tax on it. I'm already in a 35 to 40% bracket on my corporation. So last thing I want to do is pay more taxes. Okay, well, why don't we set up a premium finance strategy and let your corporation do all the work? You're not going to do that with a trust. But with a C Corp, S Corp, and LLC, you've now made the loan commercial. Does anybody know the difference between a personal loan and a commercial loan? Hopefully y'all do. Quick example. I'm a construction guy. I went to an auction the other day. I went in and bought 12 bulldozers, wrote out a personal check for it, went back to my CPA, gave it to him. He looked at me and goes, why'd you do this? We can't even have a tax advantage. Now, do you understand the word I just said? Tax advantage. I'm not a licensed CPA, so I don't use the word tax deduction or tax write-off, okay? I use the word tax advantage. You leave that up to the CPA and tax attorneys. But the CPA is going to look at me and say, Mr. Coulter, why didn't you use your corporation? I could at least wrote off all the interest and everything as a business expense. You just made it a commercial loan. Y'all kind of getting the gist on this? Nobody else out there is trying to do it this way. Well, we've been doing it this way for a long time, and the CPAs love it. And when I mean CPAs, the last one we sat in front of was the symposium for 325 of them at LSW, and they ate it up. They found out what premium finance could do for their clients and how the client could really spend money, okay? So that's just an idea for you. We're going to also show you how to rescue somebody out of their actual money and give them a place to actually dump money, okay? Anyway, as far as making the big mistakes, failing to identify the financing and funding alternative in place, we're not going to do that. I'm going to show you how, and me, Brock, Jeffrey, I don't say me, y'all. I say North Star. So when I say I, it's not me. I hate that word. It's North Star. We're all going to help you get into that position to actually bring up your options of you should do it this way if you like, or you could do it this way and so forth. Okay? So let's move on down here. You already know we combine life insurance and IULs. Okay? There's different out-of-pocket options. As far as unique platforms, we feel ours is unique because one reason we're going to show you why we designed it the way we designed it. And that all became back when, I don't know if some of y'all have been in the business 40 years and so forth. My dad used to always ask me, if you didn't make the sale and you're walking back out to your car, ask yourself, how come I didn't get the sale? I thought I did a good job. Did you know if your client was visual or auditory, or we just stalled talking? You lost them. I need my client to do one thing. Your client, excuse me. I need that client to do one thing. Pay attention to what I'm fixing to tell you, and you'll understand this, whether you're an auditory person or visual person, okay? So the actual client profile on the IRA, as you know, is 60 years old, 750,000 a year for 2 consecutive years. The liquidity on the small case platforms. Now think about it. 2 ways to qualify instead of just one on the income side. Your client needs to have at least 125% of whatever they're going to pay out of pocket. So if they're going to pay $25,000 out of pocket, they need $125,000 in liquid assets. That could be their brokerage account. That could be their annuities. That could be a CD at the bank. You know, they don't like to look at your house because you can't sell a house fast enough usually to get money out of your house. Doesn't mean you can't go borrow equity on it, but the client just needs to be liquid. You don't want to sell somebody that makes $100,000 or $150,000 a year and they got $25,000 in the bank and the rest of it's all locked up. Okay, that's not a good client. That's a client that's barely hanging on by their shoestrings. Don't misunderstand me. It's still good money. It's still a great income. They're just not a fit for you. You're going to get them in over their head. And that's the last thing you want to do is get them in 2 years down the road. They're like, man, I should have never done this. This has been, this has been hard on me since day one, and now I can't pay it. Well, I'll show you why ours is different than the competitors out there when they say, I can't make this payment. Okay. The highlights on this is you can sell policies up to from 1 million to 4 million. I should have been changing that because we actually have the event. How should I say? We have the privilege of, let's say, using LSW to actually go underneath their $1 million requirement. Anybody familiar with the Summit Life product that used to be Peak Life and so forth? When you sell that, it's got $1 million minimum. North Star on the small case platform can go underneath that. Our software goes underneath that. Our LSW software lets us break that barrier and go underneath it to actually maximize the cash surrender value growth instead of it automatically stopping at 1 million. So when I say 1 million, you could sell one down as low as 500,000. Okay, you probably wouldn't, but I'm just letting you know it doesn't always have to be $1 million like the other carriers put out there. Okay, the minimum pay we're going to do is $50,000 a year. Explain that. Why? Because that's what the bank will do minimum. The banks don't want anything less than that, than a $50,000 loan. We do not fund anything less than a 10-year loan. Why? Anything less than that doesn't work. It's going to run out of gas. When you show a 5-pay or 7-pay, they don't get to the finish line. And you can't support it in court if anything went wrong. If you have the experience behind you, and let's say you were selling insurance back in 1990 and you sold a person a 7-year pay, found out when the rates went for at 10, they went to 4, you had to go back to your client and tell them, we need to put some money in that. Well, you told me I only had to pay 7 years. It didn't work, did it? It does the same thing on an index UL. Okay. So we always fund everything for a minimum of 10 years. Now, when I say minimum of 10 years, does that mean the client's got to take it for 10 years? No, it just means that the bank has escrowed the money to be paid for 10 years. Hopefully y'all understand that. There's nothing worse than going, give me a 5-pay, but didn't get there. You got to go find another lender to pick up where the other one left off or go through new fees and new costs. Wouldn't it be better if you just had it escrowed and you didn't use it if you wanted? We always use it for one reason. To get a policy to the finish line, you need more than what the tank of gas is just to get there. You always want extra, just in case something goes wrong. Okay, so that's what we do in that. At a pocket range, 5 to 10. The 5 is kind of a myth concept, and I say this as a person that's sold insurance since 1984. If you're going to approach somebody on putting money in, they better be a professional athlete when they want to quit at 5 years because they might lose their contract. When it's your regular client, there's not a client on the planet that's going to look at the retirement income and say, that's enough for me, when it's not even enough today for them to retire on. But you can do it at 5. You can do 6, 7, 8, 9, 10. You can do 12, 15, 20. We can show you that if the client didn't want to stop, why should they? I wouldn't. If I'm putting money away from my retirement, I'm not going to stop. I'm going to keep trying to cram as much in there. Why? It's going into a tax-free vehicle. So you are allowed to customize these more than one direction. It's not just us throw it at you. You could actually say, Pat, the guy wants to put it in 13 years, then he wants to exit the loan. Good, we'll run 13 years. We can actually do multiple different payments when on the 5, 10, whatever you want to do. It's not just set in stone that if you had to do 30,000, you couldn't bump it up to 50. You bump in it at 100 and then drop it back to 30. Everything's customizable. Your client's making the one to the bank. You just want to show them how they want to get to the finish line, especially if they have, how should I say, outside assets, or, they've made extra money on flipping a house and they want to do something with it. Show them how they can put it in their policy, and you can illustrate it. Okay. You already know the range goes up to 60, 65. I always say 65 plus because 65 plus can also bring in the survivorships. You are allowed to do the small case platform and traditionals. You're allowed to do small case platform even on survivorships. Now that brings in when you're going past 65 plus, because as y'all well know, the survivorship policies out there will do it for less cost. Now I can tell you right now, the one that beats everybody's brains in right now is LSW on their survivorship. Maybe John Hancock comes in second, okay? But that opens up the door for your client to actually do something like that. Now, when we do a survivorship on the small case platform, we're also going to show you how to customize it where they can actually get the money on the estate side, or you can put a first to die rider on there that still pays the first individual when the first one dies, or second individual when the first one dies, giving them the money they would have had if they'd had two policies. Yeah, we just put three policies on one group right here, and now they're not going to ever get rid of it because it ties in everything. Their estate, their personal. This is a fantastic deal. Okay, I know I'm going fast. Hang on one second, and hopefully y'all can hear me. The ownership.
Hey, Pat.
Yeah.
Yeah, so we'll run a few more minutes if you don't mind, and then I'm gonna ask a few questions, and then if you have anything you want to wrap up with, that would be perfect. We'll close down in about 5 to 7 minutes or so.
Okay, let me go even faster.
Let's just hit on the good stuff.
Yeah, the base spread on the small case platform is 1.85 guaranteed for 10 years with an auto guarantee for an additional 10 years if you're still in loan. That makes it out there where the lender cannot mess with your loan for 10, 20 solid years. So the only moving part in your loan is going to be CMT, okay? We don't care where you put your ownership. And if you put your ownership in your own personal name and you have a corporation do the work, which that's always a great way to do it, then that's your choice. There's no arrangement fees, origination fees, and so forth. Case split on small case is 15%, okay? Now I'm going to buzz through here real quick. This is what the actual illustration looks like. And this is basically, how should I say, propaganda for your client to read on, blah, 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 on taxes and so forth. What can you do with an IUL and so forth? Where the tax brackets been throughout the last 20 years and so forth. And how's it funded, okay? And we've got a schematic for you to look at that. Now, when I come into the actual what are the details? This is something also you can tell your client, this is how you qualify, 50,000 here, 500,000, blah, and so forth on the policy face amount. Okay, do I need a life exam? Yes, you're going to be underwritten unless the carrier like LSW is doing an underwriting for non-medical and so forth. Policy page. This is your summary page that we put up first. And this would actually show this is a 40-year-old preferred rate class. Death benefit was $953,000. As you can see, we went underneath $1 million. And this one actually showed contributions for 10 years, and the funding was 10 years, okay? Shows how much the client would put out of pocket, $30,000 10 years for $100,000. The actual policy, $50,000 for 10, $500,000. Maximum death benefit was $434,000, and the income was $79,000 at the AG 949 rates. At $79,000, $2.7 million a year. Y'all already know 3 years ago we were showing 1% and 2%. That was a lot more. Now, this is the actual case design. And one thing I want to point out to you right now, and I'm going to blow that up as much as possible, everything in the green is the loan, okay? Everything in the blue is the life insurance. So let's look over to the left real quick and see how we funded this policy, okay? We actually took out a loan from the lender at $50,000, okay? Now, this lender does one thing. They use what's called a DDA. That's a demand deposit account, kind of like a premium deposit account. But here's the deal. Lenders don't want to give you the rate of 1.85 in CMT unless you're borrowing $1 million. They would rather give you a spread of 2.5 to 3 plus CMT. Our lender turned around and said, look, we can just borrow 4.5 years up front, then we'll give you the 1.85 locked in. For any of y'all know base spreads, that's a big deal to get the lender to lock that down so that the loan can't move fast. And also, whatever you put on paper has a high probability of getting to the finish line. This actually started the loan at $244 a year on the end of the year loan reduction. It showed we owed $17,000. This client paid $30,000 out of pocket for 10 years, and we took an exit in the 14th year. That's not a year that we had to. We just do it out of design. North Star likes to come out of it in 20 years or less, It looks short on paper, but it's actually 15 years is a long time. That's an end of the year loan balance in year 14. That's the beginning of the year loan for LSW, Allianz, Metro, and all the rest of them except for Lincoln. Lincoln does end of the year loans for any of y'all that didn't know that. So we're showing a December balance in the 14th year. January, we paid it off. We came down and we took an income out for life at 65 for the rest of the client's life. I will tell you this. If you try to cut the income off at 90 years old, have a good reason, because I don't know a human in the world that would say, I don't want my money anymore at age 90. Because the only thing you did was you let $79,000 go back onto the death benefit. Okay? The policy itself, once you make a loan payoff, dictates over loan protection rider. That income will not change. Whether you stop it at 80, 90, 95, or 100, it's still going to be the same for one reason. Anytime you take out the first loan, which is a carrier guideline retirement, the 416, this number here was set in stone. For all of y'all that didn't know that, you can try it out on your software. But here's the other side of this. This one actually showed the client paying $416,000. Idea for you real quick. What about the doctor that wants to sell his business 15 years and he's going to have $2 or $3 million go? You just showed him a place to take outside funds and leave that money in the policy. Yeah. Now multiply that times 10, and when you're dealing on the traditional side, and you just showed a client how they could take $4 or $5 million, pay the lender off, and keep the $4 or $5 million that's in the policy. Look at the person's cash surrender value before we took it out, $751,000. Every one of y'all are professionals in the life insurance business. Would you tell your client to go take $400,000 out of his life policy, or would you tell him to go take it out of his annuity, his 401k, his mutual fund? Everywhere else it's taxable, except leave that tax-free money alone. It's worth its weight in gold to you. You can touch it. It's never a distribution. My gosh, everything else he's going to touch outside there, it's a distribution immediately. So this way you're actually being able to strategize with the client. Now, when you're talking about this with a client, think about designing a plan where the person tells you, well, yeah, I'll probably have about $6 million. I need a place to go with it. Today, if they walked into your office with $6 million, that's an arbitrary number, where are you going with it? Back into annuities, a little bit in life insurance, you're spreading it everywhere, and 90% everywhere you're spreading it's going back into taxable vehicles. I'm strategizing with a client, and I'm going to give them a place to go dump that money down the road and do it all in one lump sum, and it just literally went from his hands, and now he's got the actual bank account, so to speak. He's got the cash surrender value in his policy that's sitting there tax-free. That's a strategy none of y'all have used. I'll say that. Excuse me. Forgive me. Maybe one or two of y'all had, or three or four, whatever. Now, here's the biggest benefit. You've seen the competitor out there, and I'm going to hit on this for one reason: doing things right. When our clients actually are going to pay the $50,000, we do not split the premium. How many of y'all have lined up 10 clients and know that 10 clients are going to pay the premiums 100% perfect and hit that anniversary date without fail? I can't say that. And anybody that is on the premium payment side that splits it, okay? You just now put all the pressure on their shoulders. They can't miss the payment. The competitor out there, you miss the payment, the loan goes into default, period. 30 days. There's no getting around it. There's no making a partial payment. There's no posting collateral. You pay, they pay. You don't pay, you go to default. If you didn't know that, then you know it today. We look at it and say, let the bank do the bank's job. Bill, the client's going to pay this. The bank's going to pay this for 10 years. You're going to sit on the other side and pay yours back toward the loan. Therefore, Bill, if you turn around and say one day, I can't make my $30,000, that's okay. The policy's still going to get funded. The client can still go down the road. This is great. This means you don't get a commission recall because your policy just got lapsed out because it got recalled. It went into default. The insurance company loves it. Why? They don't lose a piece of business on the bus. This was good for them, good for you, and good for the client. The client got to breathe and go on to the next year. Y'all see the difference on this? Now, one last thing. At all times, the client gets to put the ownership in their name. I don't care if it's in their name as an ownership personally or if it's in one of their trusts, but they are in control of their money at all times. That may not seem like a big deal, but the other competitor out there that I think some of y'all already know, you gave up your money to a master trust. You hopefully you made how should I say? you gave your client full disclosure. You told them they were going to lose ownership of their money because it was going into a master trust. And I'm sorry, Mr. Client, you're not the trustee of the trust. Therefore, you don't have anything to do with it anymore. It's not yours. If you didn't tell the client that, you're going to wish you did. Now, here's the time bomb going off. My client's the owner of their money in our program. The bank's going to do all the work. The client gets to have the freedom to have options. But at any given time, you have money going into that master trust on the competitor. How do you get money out of their trust back to yours if you're doing a trust? How do you get it back to you without it being a taxable event? Go find the tax laws. There are none on it. It's a taxable event. It is a time bomb waiting to go off. If this was a trust deal like the competitor does, your client owes your client owes taxes on $416,000 before they even got the money. Tell me that was a great deal for them. Did you make full disclosure when you told them this? The way that Northstar does this, let the bank do the bank's job. Put the client on the other side where the client can breathe, make mistakes and trip and fall, and you could still pick them up. But most of all, the money's still sitting in the client's pocket. They were the owner of the policy the whole dadgum time. Okay? Y'all get the gist of that. I'm going to take one more step, and then you can split up for answers or whatever. If you use a corporation, C Corp, L or LLC, the loan now becomes not a personal or a trust loan, it becomes a commercial loan. Everybody here know about a split dollar? Hopefully y'all do in the insurance business. Split dollar is 99% company does all the work, 1% the actual individual does. If this is an actual split dollar where the company borrows the money and the company pays the loan interest, what do you think that CPA is going to do with that interest? Wow, the net effect $30,000 out of the companies is going to have a tax advantage. You didn't get that when you sold a trust. Now you're actually showing the client how to really spend $30,000, get a tax advantage, so their net was less than that. Wow, the CPA is going to love you for this. And they're actually going to do one thing. I got other clients you need to talk to about this. They're spending XYZ on money. We need to get them in to do this so I can show them how to spend their money right. Okay? And if you understand that, okay, three things, okay? Asset protection. If your client were to get sued somewhere down the road, let's say year 10, you had $383,000, multiply that times 10 if you're on a traditional. You always want to be able to come in and say, I can show you you have asset protection. Mr. Client, don't worry about filing bankruptcy or getting sued and so forth. Let's go pay the lender down, let's say $380,000. We'll leave the balance of $3,000 on there for one reason. The bank has a UCC1 first lien against the policy. That's a federal bank lien. Nobody can get through that first lien holder. That's not a personal lien. It's not a summary judgment. That's a federal bank lien. Ever seen an attorney walk into a bank and say, you need to cash that policy in so we can get that money? They look at them and say, get out of here. That's asset protection. When I talk incomes, I'm going to show my client maybe not taking I'll show them the 416 coming out of the policy. I may show them the 416 coming with outside funds or 200 or 300. You get to customize this. So when I get to pay the loan off with outside funds, my 79,000 just went to 200, 300,000. Wow, you can't do that with regular IUL. For the other ones that y'all are selling on death benefit, we'll look at the net, multiply this times 10. This is a small case platform, but money's money when it comes down to people really wanting it. Let's say the client comes down and says, you got pancreatic cancer, you're going to live for 12 months and they could die in 6 or whatever, but they had enough time to get their papers in order. Your client may be sitting there with money in their estate or whatever, or bank account that don't want to go through probate. Why not tell them to go pay the loan off? Let's just say in year, what was that, 400,000? Hey, has anybody in my family got a problem with getting their money tax-free? I'm taking 400,000 out of the bank. I'm going to go pay the lender off, and now y'all get the death benefit of 1.2 million instead of 800,000. That was a wealth transfer move. You didn't get that when you sold regular IUL. I know I'm throwing a lot at y'all very quickly and so forth, but premium finance is a strategy, not just an interest rate game. It's a strategy to give the client a way to spend their money. It's to give the client a way to actually get asset protection, to double it, even triple their income, to even do more than that if you really want to, and or a death benefit play. So many different variables can go in this on how you want to design it. The world is now open to y'all because you're no longer using just a trust. Okay? And also remember this, I meant to tell you, we don't do things on a tranche or anything like that. You get to sell these as soon as you get up and down and go to the finish line. You're not waiting on nothing. If any of y'all have sold the other ones out there, you might have had to wait 2 weeks, 4 weeks, 6 weeks before they could fill it up. You could write these suckers all day long. even multiple people, so forth, and you're off to the horse races. Every one of these designs are custom designed. You get a little propaganda back here in the back, and I'll shrink that down. At the end of the illustration, your actual logo and so forth can go on this. We actually do the logos. We started doing this years ago, so you could promote your business as a value-added service to the client, not us. Okay, this helps promote your professionalism out there in the business. Okay, if you don't want to put it on there, that's fine. We can put blank on there, but this helps promote you. Okay, so everything we do is customized, all the way from presentations to even flyers. And I'll just pop one up real quick here. I'll finish off and y'all start asking questions. Let's see if that'll take. Can y'all see that? Did it change screens for you? Have you heard about the new IRA? It's like a page and a half flyer. Your name will go up here, your logo will go up here, and so forth. And it just quickly tells the client, read about this real quick. Call me back if you're interested. And it says corporate asset protection, income. It's just a quick flyer that we put together so you can just lay it down on the desk. And hey, if you don't want to see anything, at least read this. Okay. Pass them out, email them out if you have to, because everything's emailed today. Okay. There's several different things that we have. Now, I hadn't even covered the beginning on how to show y'all how to manage collateral and so forth, how to look at the corporate sides. We just hit on a bunch of, highlights today, literally just to throw the whole kitchen sink at you at once. I just wanted you to actually understand and think about one thing. When I showed you this one last design, and Bill will go to questions. When I showed you this design and I told you the loan was in the green, the life insurance is in the blue, for you visual people out there, because I'm visual sometimes, but there are people you sit in front of, they don't need anything. They're auditory. They can listen to you and comprehend numbers all day long. I gave you the visual. The loan's in the green, the life insurance in the blue. You now divided the program. It's life insurance and it's a loan. And always remember one thing in premium finance. If the policy can't outrun the loan, it doesn't work. That's it in a nutshell. If policy can't outrun the loan, premium finance does not work. And the last thing you want to do is get somebody in over their head and never see the right numbers. Y'all are seeing no collateral numbers over here. We don't have any on the actual small case platform, basic and estimated. That's another learning process for the traditional side that we can go through. But we'll show you on that one, not today, we'll show you what the bank has to do under federal law, that everybody else out there breaks the rules. And we can always show you how they break the rules and try to get you to go sell it to make your 20, 30%, because they don't care. They'll deal with the problem 5 years down the road when you're the first piece of asset that gets called on, because if something goes wrong, the client's pointing the finger at you. That's where we look at it. That's unacceptable. Let's make sure that we can explain every single step. And let me tell you something. First thing they're going to do, pull this illustration out, and they're going to go through it. That's when I'll tell you right now, you better have North Star so you can explain your way of every single move you did, because I would be willing to bet some of you out there, you've got other spreadsheets that you can't explain how they did it.
Hey Patrick, how long have you guys been in business now? Just so everybody knows, since what year?
I would say probably back in the brokerage side of the business, probably about 1995. Before we formed the company and went straight North Star Brokerage before it was that. I want to show y'all one last thing real quick here, and you can answer the questions. I invite each one of you that wants some more material so Bill doesn't get bombarded, because we have a lot of generic information and so forth. But let me just pull one up here real quick. I'm going to actually pull y'all into this. Go to the North Star Funding website, okay? And you can read about case management. You can read about capabilities. We have a suitability form on here, okay? And the suitability form is for you to get a quote ran, and let's design one for your client. We've got a PDF version of this that you can always keep on your desktop, but if you're in the website, you can fill this information out. Some of it's going to be required because we have to have it, like who's your MGA, BGA, and so forth, Levinson Associates, that's what you put there, and you put your client's names, okay? Age, email, date of birth is always better, because some carriers are nearest age, some carriers are current age. Okay? But once you're done with that, telling us how you want to do this, some of it you don't have to put, some of it you do, so forth. You send it off, and it hits every designer that we have immediately. Okay? So I invite you to go to that. When it comes to the platforms, you can read about both platforms. Now, we also have a media library. What I mean by the media library, this is a sample of This was our last email about the rates getting higher and so forth. We have Dell on here, which I can't tell. We got like 70 something videos in here of actually educating you on things that will help you in premium finance, such as using other people's money. The last magazine article we did was actually for the big dogs. I guess that's what it was called back then. All of y'all can go to this. The online software, you won't get access to that until you get a case on the books, and then you get your own set key and everything to go in there. You've got about us and so forth, but if y'all were to go in there, and let's just quickly see, I just want you to see one thing, because a bunch of y'all are going to want to see something, and that is where materials, you want the materials, they're in there. Videos, I'll give you several things. You've got IRA training videos, okay? And these are from the pros. This is from Kim and Dale and so forth. You have traditionals. There's 70 something videos in here. How's life insurance different? What's the overview? What is finance life insurance? Everything's in here. And then we have basically about our sales marketing and so forth on Welcome to North Star. Why are you financing life insurance? Y'all are more than welcome to get in here and get great education. Okay.
We're going to need to do a part 2, Pat.
Yeah.
There's a lot of great stuff.
I apologize. But
no, it's
anyway,
okay. It's okay. We got to.
And so, question.
Okay, here's what we got to do, because we promised everyone this would be an hour, and we started a little bit late. So here's what we're going to do to all the agents that are on right now. We got a bunch of questions. We're going to get everything answered as soon as we hang up, and then we'll circle Patrick back in if needed. And then we're also going to schedule a part 2, because there is so much here. And I think, an important point for all the agents listening, some of you are very Premium Finance 101. We have other veterans on here, right, that are comfortable with the process. Pick up the phone, call our marketing team, okay? And as soon as you are set up and you're active, we'll make the introduction, and you will be off to the races. The North Star team will help you every step of the way. So I don't want you to fear, I don't know how I'm going to understand the illustrations and how am I going to answer these client questions. And we are here to help, and then we'll pull in North Star as needed. So once you are set up, we're going to show you how to do that on the next slide here in a second, because I know a lot of you are asking, probably yourself right now, saying, Bill, I want more, I need more, and I have to get access to the marketing material in detail. So on our website, if you look at the slide in front of you, it'll hover over Premium Finance with the yellow arrow, and then everything is at your fingertips. In fact, we have a version of the intake form as well. And then the next slide shows with the 4 go-to carriers how you will get set up, or if you're with another IMO, obviously we'll transfer you over and you'll get paid as much or even more comp, plus free leads or cash for contracting with your first paid application. So those are the 2 requirements. We're also going to include that in the thank you email. And then I have about 2 minutes left here, and we'll put a bow on this. And I'm so sorry, because I know we're way over our time limit. So my apologies, and I know we started late. Leads. So real fast, these are our latest and most current lead programs. The hottest program right now, hands down, is the top section. Those are our social media leads, $1 million, no exam life insurance. These turn into monster IUL sales, whole life sales. We've seen small groups, business owners, all the above. That's the one that Ian uses and half of our panel at the expo. So I can't recommend those enough. You also get a co-op discount because you're a Levinson agent. And then let's keep moving along here. Insure Me Now Direct, we are adding Banner Life to the platform. We are super excited about this. In fact, we're rolling it out this month in August, and I have the head of distribution at Banner Life. He's in charge of the entire country. He's going to be on our podcast also talking about this new partnership and integration. So it's going to be amazing. Make sure you're set up. Bill Levinson Experience Podcast, that's our podcast channel. In fact, I hosted a 1-hour episode with Kim, which is Patrick's brother. So we have that. We'll include in the thank you email. We talk all about premium finance from 100-foot level and down. So that's very interesting. And then on the right-hand side, we have Farron, who is literally in charge of legal and general Banner Life for the entire country. So that's going to be amazing. He's got some great insight, especially when it comes to life insurance in this new tech world. Okay, upcoming trainings is what you're looking at next in the bottom blue section. These are 3 awesome webinars. I just want to point out quickly the Banner Life launch on Insure Me Now Direct on the 16th. Joe Ross, my favorite keynote speaker in the industry, hands down, is coming back on the 23rd. And then on the bottom, first time ever, we are hosting a 101 sales training class just for annuities. Okay, we're going to dissect annuity selling in 2023, and that is our part 1, first ever on the 30th. Make sure you're registered for these 3 trainings. Our last slide here, and again, I want to thank you for hanging in there with us. We're going to answer every single question as soon as we hang up. I'm going to end it with this, right? Because if you've never brought up premium finance before, or you're a rock star in this space, kudos, okay? And I promise, between our partnership with North Star and everything we have to offer, every single person on this call will learn and be able to leverage our custom marketing material and technology platforms to make more sales and help more clients, which is the name of the game. Let's end with this quote: whatever you put into it is exactly what you will get out of it. So take the time. This is everything in life, personal, business related, high octane, right? Because whatever you're putting in, you're getting out. You're going to see it on the other side. Let's have a wonderful rest of the week, a great weekend, good selling, and keep your eyes peeled for our thank you email. Thank you again, Patrick, and to every agent that hung in there with us this last 90 minutes. Take care and great selling once again.